India is a developing economy in the sense a lot of funding is required for development. And for real estate, a lot of fund is required. And whenever there is any project, so a developer requires construction finance. Whenever there is a customer wanting to buy a property, you require finance. If you want to start up your own business and you want to take a huge business loan, the bank will ask you for some mortgage or some security. That also comes under home finance. There are various products of home finance industry which can service all these customers. Let us first understand which are the basic stakeholders of home finance industry. First and foremost is this is an extremely retail customer driven industry. That means most of the funding goes to retail customer, a person who buys the property. What is the difference? Let me explain. Please understand. Let us go have 5 minutes and take some time to understand what is banking and what is a product of banking. Unlike all other industries, banking has only one product called money. They lend money and they borrow money. So they borrow through your savings account and they lend through various loans. They can give you a home loan, they can give you a car loan, they can give funding without understanding the risk involved. There are some regulatory authorities which are involved as far as home loan is concerned. Home loan is the most complicated of the loans. If you look at any kind of a asset that is loans, home loan is a bit complicated, process is more, products are more, it's a complex product. Whenever there is any company or a financial institution which has funding or borrowing capacity from a bank, a financial institution which has a backing of a bank is called HFC, Home Finance Company. Whereas if there is no bank involved and the financial institution is right now going on only on the basis of an investor funding coming in the bank, we call this financial institution as NBFC. At home finance, the amount of lending is very high. Very high. I mean, all the individual loans which are given are more than 20 and 30 lakhs. But looking at the 5 biggest, I'm saying 5 biggest NBFCs put together, they must be funding close to crores every month on month. Because of this, the government had to have a regulatory authority giving guidelines that this is how the funding is going to happen. So these guidelines are by the NHB, that is National Housing Board, which is also called regulatory authority for all home finance. Though NHB cannot rule out anything, the guidelines are issued by NHB and RBI directly. The products are designed with the help of NHB by the financial institutions themselves. The control is not direct, is not a directive, it's a guideline. But so they give you a framework in which we all operate. Now, ICICI will have a different way of funding, HDFC will have a different way of funding, State Bank of India will have a different rate of interest, Indiabulls will have a different set of customers, but all these have to fall in between the NHB norms and NHB guidelines only. These are statutory requirements. These banks go into audit and there are very, very strict charges if they don't follow. So the next slides will show the basic guidelines which NHB asks us to follow. Suppose you ever go to any financial institution, there will be some changes which will suit the FI, that's a financial institution, as per their own risk. So there will be a LTV norm, which we will come to very, very soon. The LTV norm will be only a guideline you should do on one single property. But how much to do will be exact, the upper limit will be guided by NHB, but they're a bit complicated. We will discuss only 3 rates of interest in the next 2 slides.